Hello and welcome back to my channel. Hope you enjoy my previous videos. In this video, first I'm going to talk about introduction to moving averages. Then I'm going to discuss different types of moving averages. What is the best profitable trading strategy using this indicator? And finally, I'm going to talk about using moving average to determine support and resistance levels. Simple moving average is defined as lagging technical indicator to work best in trend following system, and when used correctly, the direction, magnitude, and rate of change of the trend can easily be obtained. There are three different types of moving averages. The first one is simple moving average, SMA. The second one is weighted moving average, WMA. And the last one is exponential moving average, EMA. The two most common types of moving averages are the simple moving average and exponential moving average. One of the most interesting applications of moving average is trend detection. Simple moving average help traders to identify whether they're facing with a trendy market or volatile market, and also receive clues when the trend is reversing. The reason for the name moving is that as the price moves, new data is entered into the moving average calculations, and therefore the average is constantly changing. Simple moving average can be calculated with the following procedure. Let's assume the closing of 10 consecutive price of a certain stock be as follow: 1000, 2000, 1100, 900, 1900, 2010, 2020, 1600, 800, and 1300. If we add these 10 numbers, we get the sum of these 10 numbers, 14,630. Now, the value of simple moving average is equal to the sum of these 10 numbers divided by 10. So 14,630 divided by 10, which equal to 1,463, and the period is 10. The time frame in this indicator can be minute, 1 minute, 2, 5, 15, and 30 minutes, hour, 1 hour, 4 hours, daily, weekly, monthly, 1 month, 2 months, 6 months, or even yearly basis. The most common time periods used in moving average are 10, 15, 20, 30, 42, 50, 100, and 200 days. The shorter the time span, the more sensitive, and the longer the time span, the less sensitive the moving average will be. To find out when to enter and exit the market, or when the trend is upward or downward, some traders, to spot crossover technique, combine two different moving averages to produce more accurate buy and sell signals. The most popular pair of moving averages are 10 and 42, where 10 represents of 2 weeks and 42 represents of 2 months trading. Let's see an example. This is Yahoo Finance WMT stock H1 time frame. As you see, I installed two simple moving average indicator. One of them is SMA 10 as a fast moving average. Another one is SMA 42 as a slow moving average. You see SMA 10 here indicated with the red color right there. And another one is SMA 42 indicated by blue color. Now, whenever SMA 10, the fast moving average, be above SMA 42, we have an upward trend. Whenever SMA 10 be below SMA 42, then we have a downward trend. Now, another thing is when the SMA 10 crosses SMA 42 right here, while going upward, we have a crossover buy signal. Whenever SMA 10 crosses SMA 42 while going downward, at this point, we have a crossover sell signal. This is Yahoo Finance and FEC stock. I installed three simple moving average. One of them is SMA 10, another one is SMA 30, and the last one is SMA 50. SMA 10, indicated by blue color, that is considered as the fast moving average indicator because it's much closer to the price. Then SMA 30 as intermediate indicator, indicated by green color. And finally, SMA 50, indicated by red color, is considered as the slow moving average, which is much farther than the price. So anytime that the SMA 10 fast moving average be above SMA 30 and both of them be above SMA 50, then the trend is upward. The trend is upward. Anytime the SMA 10, the blue color, below SMA 30, the green color, and both of them be below SMA 50, the red color, then the trend is downward. So here we see when the period is small, is much closer to the price, and as the period increases, then it is becoming farther to the price than SMA 10. Exponential moving average focuses most on the latest data points. This average is also known as exponentially weighted moving average. The exponentially weighted moving average shows a great reaction to price changes than the simple moving average, which assumes equal weight for all observations for the period. EMA 12 and EMA 26 are usually the most common short-term average used to build indicators such as MACD, moving average convergence divergence. In general, EMA 50 and EMA 200 are used as signal for long-term trend, although this indicator works best for short-term signals. Let's have an example. This is Yahoo Finance FEC stock H1 time frame. I installed two moving average. One of them is EMA 50 right here. Another one is SMA 50 right here, simple moving average. Now, this is simple moving average SMA 50 indicated with the blue color. And this one is EMA 50 exponential moving average indicated with the red color. Now we see EMA 50 is much closer to the price than SMA 50. So here EMA 50 act as fast moving average and SMA 50 act as slow moving average. Now, when EMA 50 be above EMA SMA 50, then the trend is upward. When EMA 50 be below SMA 50, we have a downward trend. You see here is downward. Now, when EMA 50 crosses the SMA 50 at this point, while going upward, we have a crossover buy signal. This is where you enter the market. And when EMA 50 crosses the SMA 50 while going downward, at this point, we have a crossover sell signal. This is where you exit the market. Using moving averages to identify support and resistance levels can be useful for traders. Support model represents the lowest price and resistance represents the highest price that the stock tends to trade at. Moving average line can be used to form dynamic support and resistance levels for a market. This line prevents the stock price from moving higher or lower. Dynamic levels are constantly changing because asset prices are constantly fluctuating, making higher high and higher low, and also lower low and lower high. It can signal when an asset is at its peak, suggesting that it is time to sell. Similarly, a trader can use moving average to identify when prices is at its lowest level, suggesting that it is time to buy stocks. Let's see an example. This is a Yahoo Finance ERF stock D1 time frame. I installed the simple moving average with the period of 20 in this chart. And you see here the prices while going downward, it hit the moving average and bounced back and hit the moving average and bounced back. Here it hit the moving average and bounced back and again hit the moving average and bounced back. And you see this part of the moving average act as a resistance level. Here it break the support, it break the moving average and go upward, but while going upward 2-3 times it hit the support level, the moving average, and bounce back here and here and here and also here. So this part of the moving average act as a supporting level. So we see the moving average acts as resistant and support level. If you like this video, thumbs up, subscribe to my channel, leave your comments. Thanks for watching. Take care and see you next time.